Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Jim, thanks for having me back, and thank you to everyone listening in.
Ted, you've done a little cleanup or rearranging there of your Insider Index. Can you tell us about some of the changes you've made?
Right, so what we've done, we've taken a look at the rebalancing of the Canadian Insider Index that took place in late summer, and also general insider trends in relation to, the big changes and moves we see going on in the markets right now with the election going on and what looks like will be a likely change in administrations in the U.S. Nothing is for sure, but I think, the markets have had to work through, what's going on in the U.S. They've had to work through, of course, COVID-19 impacts. So there's been a lot going on. There's always a lot going on. But I think, 2020, I think everyone will agree, has been probably one of the craziest years we've seen for not just investors, but the whole world. So we took some time to reassess our core themes, and we've come up with three of them. And the first theme that we've come up with isn't really much different from the first core theme that we had the last time, before we did the revision. And basically, what we're looking at here is for investors to be positioned in a way that will benefit from our G economy outcome. And what's the G economy? Well, it's government-led growth. Now, this is not something that we necessarily want to see. It's just one of our best calls and best themes that we think is taking place out there, that if we are going to work our way through the pandemic, that the government is going to play a major role in getting that working in terms of the economy again. Now, again, whether that's a good thing or a bad thing, that's another discussion. The question is, will they have an impact? Will governments have an impact in the way the economy forges ahead here, or its path? And if so, what does that mean for investing? So what we suggest is that Canadian mid-caps, Canadian stocks could do well in the G economy. And why is that? Because when the government gets involved, you're likely to have some inflation. And in that case, Canadian stocks usually do quite well. And our Canadian Insider Index has basically a 0.7 correlation with changing 10-year inflation expectations. Okay, Ted, so that sounds really exciting, doesn't it? Correlation with changing inflation expectations. Who cares? Well, I'll tell you what. On March 19th of this year, 10-year inflation expectations hit bottom, okay? And ever since then, they've been grinding higher and higher. And since then, the Canadian Insider Index, has been on a tear. It is up since that time. It is up 54%. So it does very well. It tends to. Things can always change, but under an inflationary environment, it can an improving inflationary environment. One can always say, well, look, inflation is still relatively low. We could have that debate, but what's important is the direction of inflation expectations, and they've been climbing generally, and the Canadian Insider Index has been climbing. And what's really important here is that I think that this is still an unrecognized theme amongst many professional money managers in the market. Now, a lot of your listeners will say, well, yeah, tell me something I didn't already know. Well, that's because your listeners are, they listen to House Street all the time, and they hear what's going on by people who aren't aren't married to the mainstream narrative that really is most interested in hoping that the status quo prevails. So I think a lot of your listeners will understand what's going on. But I'll tell you what, I don't think a lot of professional money managers and financial advisors, do understand. Now, some do. The ones who listen to, I'm sure, to House Street do. But there are many that, listen to their own analysts and their own, the boss, and there is a bias amongst some of the, more established firms out there, to sort of cling to the status quo, row close to shore, and maybe tinker here and tinker there with some themes. But to get in front of a sea change, a lot of established money would rather just wait and sort of jump on board a little later down the road, which means there's plenty of opportunity for those who are starting to position for this change now. Now, for example, I continue to hear sort of the perma bears out there, making the case for bonds and dividend stocks, which is fine, and there is a risk that we do have a deflationary hit. But I can tell you, since inflation expectations bottomed, one of the more popular ETFs, the S&P TSX Canadian Dividend Aristocrats Index ETF, it's advanced 33%. Well, that's pretty good, except when you realize, the Canadian Insider Index, a mid-cap oriented, growthy, inflation-oriented index, which is, tracked by the Horizons Canadian Insider Index ETF, it's up 54%. So there's a huge gap there in terms of relative performance. Now, I want to disclose that Inc. Research gets is eligible for a royalty off of that ETF, the Horizons Canadian Insider Index ETF. But the fact of the matter is, since inflation expectations have bottomed, you've seen inflation-oriented assets doing relatively well compared to what worked very well, in the previous years, back in the last decade. Sure, dividend stocks were the great place to be, back in the last decade. But this is not last decade. This is a new era, and, not only have we got a Fed that is changed its inflation target to something that's more ambitious, to inflation averaging, but it looks like we're going to be heading towards a new scene in Washington. But now, that can be very positive for the C economy outcome, but there's also a big risk there.
We'll have more with Ted Dixon right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ted Dixon. Ted, with your refix up here, I don't know what kind of terms to use here, but you've refocused and so on. What do we need to get things going again in the economy?
Right. So one of the risks I just want to follow up on, though, on this G economy outcome, is if we get a Biden White House and GOP, a Republican-controlled Senate. I think that is the riskiest, going to be the most challenging situation for inflation-type stocks and growth stocks in general. When I mean growth stocks, I mean traditional growth stocks. I don't mean the FANGs. I mean economy-sensitive growth stocks like energy stocks, mining stocks, precious metal stocks, silver stocks. They would be very vulnerable to that type of an outcome where you've got gridlock in Washington, because it throws, not only does it throw the whole fiscal stimulus situation in question, but you could you could trip the U.S. back into into a deeper recession. Politics is a dirty business. When you've got this competing dynamic between the GOP and the Senate and the Democrats in the White House, you want to see how that plays out, and that could be one of the biggest headwinds to Jim, to your question about how do we get things going. But right now, and this is today, our base case is going to be for a blue sweep. Okay, now again, this isn't about what I want. This is about what are the most likely outcomes. That base case could change in 2 weeks. There is you can make the case that could things get much worse for the Republicans, than right now. And I think there's a case to be made that, things will probably improve for them over the next 3 weeks. And do they improve enough where they can keep control of the Senate? That's something we have to watch. But let's look at where we're at today. Let's assume that we're going to get a blue sweep. How do they and what do investors look for? Well, one of the other themes we're looking at is innovation and improvisation. Stocks that have companies that have either, delivered innovation or have learned to improvise through this COVID-19 era. So I think there is going to be a lot that comes out of this. So we talk about this quite a bit in our morning reports, and we've come across a number of companies both in the green energy space and in the biotechnology space that I think stand to benefit renewable energy. And what is interesting, Jim, is it's come up. And this is the great thing about letting the insiders guide you towards opportunity. We had not planned this, but it's kind of turning out to be a cannabis week here at Inc. Research. We started off yesterday with a warning on Aurora Cannabis. We warned about that stock in last December. It's down like 75-80% since then. Nobody pays attention, it seems, to our warning. We warned about canopy growth after Bruce Linton, after he left, but the hype kept going. But we've come also across some positive signals around a number of cannabis stocks. We've highlighted two today to our subscribers. But the big difference in what we're seeing is the opportunity seems to be focused primarily in those companies that have got the U.S. market business. The business models right in the U.S. market, or at least right so far. I mean, it's still early days. But, and we also, I also heard last night in the debate, the vice president debate, that Kamala Harris said that they were, going to decriminalize marijuana if under a Biden administration. Again, you probably need a blue sweep to get that done. But, so there's a surprise, in terms of innovation and improvisation. Companies that have innovated in the cannabis space in the U.S. and have improvised their business models in relation to the hit that just about all of them took in COVID-19, where they had demand problems with, people not being able to go out and get the stuff. A lot of companies have worked through that. Now, whether they're successful or not, that's the big question mark. We're looking to the insiders to point that way. But that's a surprise development just this week, Jim. So we're going to be keeping our eye on U.S. cannabis-focused stocks, and it's a surprise to me. It's not an industry that I've been spending a lot of time looking at, but the insiders are now giving me a nudge. Say, Ted, look over here. Look at some of these U.S.-focused cannabis companies. Now they're not, we're not all getting positive signals on all of them. There's only a few, but it's very interesting, some of the opportunities that seem to be coming up there.
Are you expecting improvisation and innovation in the areas of healthcare and managing carbon emissions?
Absolutely. Healthcare, we're seeing some very interesting developments in antibody work, and Donald Trump has just put that whole science area into the spotlight, and there's a company that we've written about a number of times that's based out of BC, but most of its antibody operations are in the U.S. And we've also seen alternative energy companies, solar companies, starting to hit our radar screens and doing some work. But also keep your eye on the oil patch. Those companies that are taking missions seriously. We've seen the Biden campaign backtrack on natural gas. They were back in when they were running for their party's nomination. They were all opposed to fracking, but now fracking's not so bad. Well, there's a reason why all of a sudden fracking's not so bad, is because if they have any hope to to reach their carbon emission targets, they're not going to be able to get rid of all fossil fuels, and natural gas is one of the I guess the cleanest or the least dirty shirt in the laundry hamper. So natural gas is probably here to stay. Keep an eye on uranium as well. I was under the impression that Joe Biden was anti-nuclear, but he is not. It's right in his plan that they're looking at doing smaller nuclear reactors as a way to get to their carbon targets. So there are going to be a lot of opportunities under this new administration if they get a blue wave. So investors have to pivot to that reality and start getting their shopping list ready in case that does happen. A blue wave is not a certainty, which is a big risk. Everyone's got to manage the risk that there's not a blue wave, that we get that gridlock situation, which I think would be terrible for markets and for stocks. I hope that's not what we get, but we will play the cards we are dealt. And the best hand that I could see for risk assets, would be a Trump president and a Democrat-controlled Congress. I think because Trump is a great deal maker. Unfortunately, I think that's the lowest probability outcome at this point. But you have to be prepared for all sorts of outcomes, not just one, and manage the risks accordingly. But certainly. We're coming across a fair amount of opportunities, and also in the U.S. market, which we cover, we're coming across stocks there now that are, for once, kind of firing up these smaller, innovative companies, whereas, a year ago, all people were focused on were FANG, Apple, Facebook, Netflix, is all people cared about. But, now we've got some antitrust concerns about those stocks. Are they going to go down? I doubt it. Who knows? I mean, that's not a prediction, but I think what you will probably see is some big money, institutional money, starting to take a little bit off the table while this antitrust cloud hangs over it. I think the multiple expansion in those big tech names has probably come to an end. So it doesn't mean they're going to go down. They could keep going up, but I think there's now going to be money chasing some other smaller opportunities more. So this isn't really a negative comment on the FANGs that I'm making. It's just, I think, a more positive comment, and some smaller, more innovative companies, let's see, they may get more attention now that you've got maybe some concerns about the long-term business models of the FANG stocks, and if you get a focus on healthcare and green energy out of a Biden administration, it opens up a whole new set of opportunities.
We'll have more with Ted Dixon right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, should we be preparing for a monetary reset, and what would that mean?
That's our third theme, preparing for a monetary reset. The one big question mark with that theme, though, is when, and we don't have the answer to that. So that's why it's our third theme in that order, on purpose. It's something we're concerned about. That's why, we think there's a good case to always have some precious metal and or cryptocurrency exposure. But I wouldn't make the monetary reset the immediate base case. It's an eventual, almost, I don't want to say certainty, but a strong outcome that is eventually going to happen. You just don't know when. And so it's a good theme to have as a diversifier, and also just to keep stocks on your radar. So as we probably get closer to that situation, that you're ready and you know where the bargains are, where you want to put your money, as we may be getting closer to that. Right now, I have some exposure to both, the precious metals and cryptocurrency areas. It's not, it's not it's not sort of like the major focus of my investing strategy, but there's always, some there. And I'd just be though concerned about that, the outcome of a Biden White House and a GOP Senate, because that would not be good for precious metals. It's my biggest concern, and it's one that we cannot take off the table. So that's a great theme, but you know what? I think it'll come more into play after November 3rd, after we see the landscape and we get a better sense of how, what kind of spending are we going to see out of Washington. The more the spending, the bigger the depth, the closer we'll get to that monetary reset. But if we get bogged down in gridlock, then that outcome is probably further down the road.
Ted, you wanted to mention something called the Aristocrat Index. What is it, and why has it caught your interest?
Right. Well, so we talked about that a bit earlier in the show, that it's a dividend focus. It's a very popular, widely held index. I mean, there are many, and it's just it has worked very well for investors over the past in the past decade or so. But the point now is that if we're heading to a more inflationary environment where you've got bond yields that are that have had their lows for the foreseeable future, shall we say, then I think that you've got a sea change, and these strategies that these dividend paying strategies, the hunt for yield is going to be replaced by a hunt for value in an inflationary environment. We're in the transition to that right now. We have not completed that transition. So, look, we had a chance on Monday for the S&P to collapse, and Tuesday it did not. We had a chance for the S&P to continue its wobbliness that we saw in late summer. It did not. There is so much central bank liquidity floating around and government largesse floating around that the G economy outcome is winning the D economy outcome, and that's the deflationary economy outcome that the bond bulls would point to as being sort of supportive of their case. So, we will have to see, but I think we're into this event, this transition phase where where value stocks are going to have their day. We're not there yet, and we've seen many false dawns on that. But since March 19th of this year, inflation expectations have been on the rise, and they pulled back a little bit, but they're back. They're moving higher again. So we will see. But right now, our base case is for the G economy to prevail, and along with that, sort of inflation-oriented stocks, such as those that are in the Canadian Insider Index. And they should, if the G economy prevails, they should continue to outperform the old sort of D economy dividend stocks and the like. So that's our our base case going forward. But as we've discussed, there's plenty of risks for alternate scenarios to unfold.
Ted, thank you so much for chatting with us.
Jim, thanks for having me back. Really appreciate it.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca. His website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.